This is the first multi-trader blind analysis I have ever done. So what that means is that I'm going to do a full watch list analysis on what I'm looking at today, and to let you know that I have not looked at the markets at all today and yesterday from the public holiday. The time is 11:20 a.m. 25th of September. So what we're going to do is we're going to go through this list and we're going to see what trades are lining up for the service alone. Also bear in mind that the video that you're going to be getting is going to be unlisted, which means that the public is not going to be able to see it. Then after a week or two, then I will make it public so that they can see on what they missed out on, so they can possibly join the premium service. But anyway, let's go through the list. So the first one is African Bank. Let's see. So it's a sideways movement. It broke out of a W formation, as you can see here. If you're an owner of the multi-trader system program, this will be a lot easier for you to understand the terminology that I'm going to be using through this video. So you can see it was a beautiful W formation. It broke out and then it went straight back down. And the reason why I didn't take it, one, because it's a bank and I said I'm avoiding the banks, and two, because of the sideways range. So technically when it broke out of the W formation, it broke out of what was still within a sideways range. So I ignored it completely. All right, sometimes I'm just going to go through the list, the watch list, and see if anything is worth talking about as well. Anglo has just broken out of an inverse cup and handle, as you can see here. The breakout is not very convincing yet, so I'm going to give it a few more days, but I'll write it down as Anglo has a possible short opportunity. Okay, but not just yet. I'm not convinced. In fact, let's look at the the ALSI 40 index and see what is going on. It should look a little bit similar to the Anglo American. So here is the inverse cup and handle. You can see it has broken below, but is not a convincing break. So there's going to be some testing. There's going to be some volume analysis that I'm going to need to do, and then we can decide. But right now, the JSE is not in a good trading environment. So when I send out trade ideas, I'm only going to risk around 1.5% of my portfolio, because the probability is gone from high probability this entire year as the market was moving up down to medium to low probability, where we can expect a little bit of volatility now going forward. So bear that in mind. Remember, I cannot predict with accuracy. I can only make probability predictions on where markets are most likely to go. Let's carry on. Anglo Gold, our short trade seems to be kind of on track. It did break below. We're in the money, but it looks like it's going to be testing this level, and it's making a doji right now, which is convincing. But remember, an open candle is not a closed candle. All right. So I'm going to be waiting for this for this to retest, and then we will see what happens. APN, Aspen's also broken down. Things are not looking good. We had the entire year in quarantine where people expected the market to drop. And now that we are kind of out of quarantine and we down to level 1, now the market is dropping. So clearly you can see that our rationale and what is actually going on in the markets are two completely different things. So Aspen's broken below. The reason why I didn't take a trade is because of this gap, and I do not like gaps in trading, as you know, according to the multi-trader system. BHP Billiton, nothing worth talking about. Also inverse cup and handle. BBT, this is a nightmare to trade. You go long, you're going to get stopped. You go short, you're going to get stopped. Unless you're a range trader or you have a system that works with these kind of ranges, I avoid this by all means. Clicks, same thing, sideways, not very convincing breakouts. As you can see here, made a W formation within a sideways range. The charting platform I'm using is called ProTrader, and the broker I'm using for this is Rand Swiss. CPI, Capitec, sideways, no movement really. Sideways, and also it's a bank, and I'm avoiding banks by all means due to the fact that they don't know, well, investors don't know which direction they are about to go. So I'm waiting for a breakout with the JSE. I'm waiting for a big breakout within the bank, sideways move, and then we will kind of get a direction on where it would like to go. Discovery has, you can see, been making a very nice, has been moving on a strong uptrend since the beginning of lockdown, and now it has broken down. So the signs are looking bearish at the moment. I'm going to have to consider hedging our positions. As you can see, I've got 5 open positions, but we might need to consider shorting more stocks, which I don't enjoy. But when the market drops, you've got to follow. We can't just wait. First round, another nightmare stock, as you can see, with such volatility. Nothing to look for there. Growth Point. Growth Point. Oh yes, it hit our stop loss the other day. I remember now. But it looks like we possibly could get back in, and the market could continue down. But I'm waiting for that retest, and I'm waiting for the big breakout to the downside with the JSE. Kumba, same story, different stock. Inverse cup and handle, broken out, broken below the uptrend for the first time since COVID lockdown. Liberty, sideways, high volatility, not interested in trading. All right, then we've got MEI. MEI, I've just forgotten what that is. Oh, Mediclinic, sorry. Sideways, high volatility, not worth trading. I think we might need to look at the FTSE and the US stocks soon. But today I'll just go through the JSE, and then if you're happy with the blind analysis, you guys must let me know your guiding as to what works for you and with the service. I'm happy to do blind analysis. I'm happy to do analysis where I've already looked at the markets, but I find it more fun that we're in this together now and we're going through the stocks one by one. MNP, not looking good. Also, there are 2 gaps, which I do not enjoy trading at all. And when there's 2 gaps, it means that there's gaps that have occurred in the past. So this might even go onto my no list. Actually, I call it a shit list, but it's not looking good for the multi-trader system. I might need to consider taking it off the watch list. Here's Mr. Price. Nothing. Nedbank, nightmare. Netcare. I mean, we've had a good year, so I can expect a bit of sideways movement within the portfolio now. But we never know. You know, we're just waiting for that one catalyst to pick up the markets again, or for it to drop heavily, and then we'll take full advantage. Netcare is not looking good at all. I'm not going to do a trading analysis. I'm going to do a long-term analysis because this is looking horrid. As you can see, Netcare has been making lower highs since 24th of January, and it's been forming this massive inverse cup and handle, which it is broken out of now. And if the market continues to drop, we are talking about a move down to 7.40 Rand. This is not looking good for Netcare. Alright, so here is my analysis for Netcare. 7.50 Rand. Old Mutual. Broken to the downside. I think we're headed for a bear market. Raynets. Broke out of this upside. Let's just see. So it broke out of this uptrend since lockdown. It's now creating a consolidation period, but it tends to do this. Every stock has its own personality. And Raynet, you can see, creates consolidation periods before it breaks out. And then it never looks like a convincing breakout, so it comes back down. This is not good for the multi-trader system. I might need to consider taking it off the watch list as well. Standard Bank, guessing it looks horrid. Yes. Sideways, no convincing move yet. So what I'm looking at with the banks, just so you can get an idea, is between First Rand, Standard Bank, Nedbank, I'm waiting for that big breakout above the long-term consolidation sideways range. Once it breaks out, we will get a direction on where it would want to go, and then we'll possibly nip in. ShopRite. This did very well with one of the trades that we took. You can see that it gapped while we were in the trade, and then it just rallied on up. Sasol. Sasol's not looking good at the moment. Since this gap to the downside, there's been very little activity, market activity deciding which way the market to go. And also there's major problems with oil, which I'll say for another day. And mainly the oil futures with demand and supply, with the amount of supply that is out there, where oil is actually... Next, let's head over to SPAR. And let's see how good it is for us. It's looking good. Remember, we're in the trade. And it broke out of the W formation, and now it is well on its way up. I might consider moving the stop loss a little higher so that we will not bank a losing trade during this volatile movement. But I do need it to break above to about 195. Or 192 before we do that. But SPAR is looking good. The Fishini Group, not so good. Sideways movement from this downside. But if retailers do start to pick up, then we could get a possible entry once it breaks above this upcoming cup and handle. But remember, this is going to be a medium probability trade for one reason, and that is because the previous direction was down. But anyway, we'll take it and we'll risk 1.5% of our portfolio. True Words. Also possibly forming a breakout pattern to the upside, and then we can grab it. So retailers could be looking good, and I'm making a suspicion that when Christmas time comes, and let's say around November, December, maybe then retailers will pick up and will rally, and we'll get in to those retailers. Vodacom looks like a nightmare of note at the moment with the sideways movement, and it's on our way to the stop loss, unfortunately. But we are keeping strict with our money management rules and our drawdown systems. Woolworths. Woolworths is also shaping up for upside, and we're already in it. So you can see we're in the money. And now we're going to continue holding. And when the price hits around 37.50 or so, I'll raise the stop loss so that we don't bank a losing trade. So that's it. That is the blind analysis. That's how I do it on the JSE. And so far, there's not much lining up except an Anglo shorts. And I don't want to force a trade. Remember, you don't want to force trades as traders because you have a higher chance at losing them rather than gaining profits. Trading is not about being impulsive. It's about being conservative waiting for your system to line up, and then following the rules based on the proven track record. All right, so you guys have got to let me know if you enjoyed the blind analysis, if it helped or didn't help, and I'm happy to do this once a week even. It's all up to you. And remember, you can follow me on Twitter at Timon R. You can follow us at Instagram at Mati Traders. You'll see there are tons of interesting posts, and even though some look like comic strips, there are lessons within them, and there's some interaction, so I'd love to hear your thoughts. And then of course we have the Mati Trader Facebook group, which you can jump on board and ask questions, and we're happy to answer most of the time. And because of COVID, we don't close shop anymore. So if you have a question at 12 o'clock in the morning, send it away. You will get an answer within a few hours if someone is awake. Okay, so that's your blind analysis. Hope you enjoyed it, and thank you for your time.